All right, so today I want to talk about Bitcoin as sound money, right? And why that idea kind of took a while to emerge in Bitcoin's history. Why this narrative of digital gold wasn't one that was very apparent at the start, and kind of why it took a number of years before people started to talk about that, and then even longer before, you know, the general population of users or mainstream media or whoever you want to kind of look at started to even consider Bitcoin as quote unquote digital gold. So I want to do this through a presentation showing one of these animations I've made, and kind of walk through some of the key moments in time for Bitcoin, and as it relates to Bitcoin's monetary inflation rate, right? So in this animation, what I'll show is Bitcoin's monetary inflation rate throughout its history. This is also known as its annualized issuance rate. So what this really means is how much Bitcoin is being issued by miners relative to the total amount of Bitcoin that's already been mined. This is also basically the inverse of Bitcoin stock to flow. So if you're, a fan of that metric, this is basically just, stock to flow inverted. But yeah, I mean, I think it's a really interesting part of Bitcoin's history, and you can kind of see why this metric facilitated, the phase shift of Bitcoin's narrative becoming kind of one of digital gold. Okay, so I mean, let's just start from the beginning. All right, so in this animation, it's January 4th, so the day after Genesis Day, right, which was January 3rd, 2009. The block height is still zero, meaning the only Bitcoin that have been mined thus far are the 50 Bitcoin that were originally issued to that Genesis block. Um, and side note, those 50 Bitcoin can never be spent, so some people disregard them entirely. But for the purposes of this animation, I consider them to be part of the total supply. Okay, so right off the bat, the targeted daily issuance at this point in time was supposed to be 7,200 Bitcoin. Okay, so this would have been the 50 Bitcoin per block that are issued and then multiplied by 144 blocks per day. Okay, that's the number of blocks that are targeted per day, assuming that we have 10-minute block times. And so this was the daily issuance that we're targeting, 7,200. And, right off the bat, Satoshi mines that first block, and, kind of starts Bitcoin. Um, but at this point, the version 0.1 of Bitcoin hadn't been released yet, so no one else has joined the network and no one's mining any blocks. Okay, so we go a couple of days while that's the case, and then a few days later, Satoshi releases version 0.1 of Bitcoin, and a few interested individuals, some of them known, some of them not, uh, decide to download Bitcoin and get it running on their laptops or computers, and they start mining it. Okay, so this is kind of the spark of the first changes in Bitcoin's daily issuance. But you'll notice that even in these initial first days, it's very erratic. Okay, so like it's going between hundreds and thousands of Bitcoin mined per day. It's jumping around, and it seems to always kind of be staying below this target, right? On that case, it jumped above it, but for the most part, it's kind of staying below. So now on the chart, we're seeing kind of this, drop over time. And the reason why this issuance rate is dropping is because, again, it's a relative rate based on the daily issuance relative to the total amount that's already been mined. So as we add more and more Bitcoin to the total mine supply, we would expect that this issuance rate will drop relative to that total amount. And so that's what's happening, right? We have a targeted daily issuance. We're kind of staying below that, at least in these initial moments of Bitcoin's history. And likewise, we have a target annualized issuance rate, and we're staying below that. Okay, so that's the white line and the orange line, white and orange. Okay, and we see a couple of, I mean, I just want to maybe take a pause here. So we see like there's moments where we just dip like really, really drastically. Okay, so that would be indicative of, probably one of those early adopters like shut off Bitcoin on their computer. They said, okay, that was interesting, but I'm going to move on and focus on other things. Like it was a fun experiment, but maybe Bitcoin's not the real deal. Okay, so it was like people joining and dropping off the network kind of sporadically, and we remain below this targeted annualized issuance rate for a very long time, right? Bitcoin's been around now for a number of months, and we still aren't even able to reach this targeted issuance rate, which Satoshi had set at the very start. He kind of expected that we would at least have a certain amount of computers or a certain amount of users trying to mine Bitcoin, and thus far we really haven't, right? So it's been half a year now, and still we're struggling to mine very many blocks, and in some cases, here's an example, right? 400 Bitcoin issued on this day, August 22nd, 2009. That means that we only mined 8 blocks all day. I mean, uh, that's a very, very low amount relative to our targeted 144 blocks a day. So again, network adoption and usage is very sporadic, and it remains that way for a number of months after Bitcoin's initial release. As it relates to sound money, um, if someone was thinking of Bitcoin as potentially being sound money, they would have seen these initial months and said, well, I mean, it looks like it's kind of failing to fulfill its promise, right? We're not getting um, the issuance rate that we've been promised, and and network adoption is lagging where behind where it should be. Okay, now something interesting happens right around this point, though. So December 16th, and then the day after, on the 17th, we finally shoot above the target. Okay, so what happened on this day, December 16th? Well, this was the day that version 0.2 of Bitcoin was released. And this was kind of a monumental update in Bitcoin because it did a few things. Um, uh, First and foremost, it released a version of Bitcoin that could be run on Linux machines. So before this point, Bitcoin was only able to be run on Windows machines. And so that obviously limited the number of users that could run it. And then the other thing that this update did was it allowed for Bitcoin to run in the background. So you could just, well, first of all, it allowed it to run in the background, and it allowed it to automatically start upon booting your system. So, you could um, basically set your settings so that whenever you turn your computer on, Bitcoin, starts running and then will run in the background. So we had, an auto start, a Linux version released, and then the third thing that was released in this version 0.2 of Bitcoin was multiprocessor support. And so presumably this also enhanced your computer's ability to mine more blocks. Okay. So with this update, we saw a huge spike in increase in hash rate, and therefore increase in blocks that were being mined and daily issuance as a result. So we're finally, kind of jumping around the target. Okay. So here we are, about a year after Bitcoin's been released. And now we finally have that spark in user adoption, and we have enough computation being thrown behind Bitcoin's proof of work that we're seeing expected behavior in terms of Bitcoin's issuance, in terms of blocks being mined, and in terms of the difficulty adjustment kind of automatically kicking in and making it, more or less difficult to mine Bitcoin depending on how many blocks had been mined, in the previous um, 2 weeks, right? Or said otherwise, how long it took to mine the previous 2016 blocks, which should be about 2 weeks if we're targeting 10 minutes per block. Now, here is another very, very interesting moment in Bitcoin's history. Okay. So again, we're kind of cruising around, jumping around this target of 7,200 Bitcoin being issued daily. And now our annualized inflation rate or issuance rate is, jumping around 100%. The target's 80%. So, what this means is about every year at this issuance rate, we will have doubled the total mine supply of Bitcoin. Okay, so this would be a stock to flow of one. Okay, for every year of flow, we double the supply. This is about the stock to flow that platinum has. Okay, so like every year we double the supply of platinum or thereabouts. So we're already starting to get into kind of that, like space of maybe Bitcoin is sound money. And if you start to look at some of the references of Bitcoin being sound money, it's around maybe this time, maybe a little bit later, within a year or so of this time, that people start to think of it that way. But, anyways, what happens next is interesting. So we get a huge, huge spike um, in mid-July of 2010. This is a crazy spike. So on this day, we got, a huge amount of blocks mined, obviously way, way more than 144 blocks. You can divide this number by 50 to get the number of blocks. So 37,850 divided by 50 would give you the number of blocks. Can't do that off the top of my head. But anyways, the point is it's way higher than it should be. So what happened here? This was when GPU mining was discovered. So, and I think it was pretty much right after it was discovered by whoever discovered it. I forget their name. But it became kind of public knowledge. But even before it became public knowledge, whoever discovered it probably started mining Bitcoin using GPUs before everyone else. And basically what you saw was this huge jump because of that. And then everyone else starts mining with GPUs, and this kind of massive amount of blocks being mined a day persists until we get a difficulty adjustment, and then it gets back down into the kind of expected range, right? And we're still staying above the target because we have more and more users joining the network, more and more GPU rigs, being pointed towards Bitcoin's proof of work and towards mining blocks. And so we continuously get these upwards difficulty adjustments. But what we're seeing is the emergence of kind of a stable issuance rate for this new digital form of money. And this is a big deal because this is something that is totally automated, right? The difficulty adjustment kicks in every 2016 blocks. If you mine too many, or rather, if you mine those blocks too quickly, right, faster than 2 weeks, it gets harder to mine the next 2016 blocks. If you mine them slower than 2 weeks, it gets easier. And so you have this self-correcting mechanism, which makes the issuance rate, stick around the target that you're aiming for. Okay. So here, we cross that threshold of there being a 50% annualized issuance rate target, and now we're becoming pretty dang stable around that, right? And I think it is around this time that people seriously start considering Bitcoin as being potentially, digital sound money. There's some references on Twitter and some references elsewhere where people start using those words together. Okay. So anyways, I'm just gonna play it now instead of clicking through frame by frame. But we kind of, so we're staying above the target, but we're also dipping below it here and there. We're staying in a fairly tight range, right? And then, boom, 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 towards the end of November, we get our first halving, okay? And then what happens is the targeted daily issuance gets cut in half. So we went from 50 Bitcoin per block down to 25 Bitcoin per block being issued to miners, which is a daily issuance of 3,600 Bitcoin if you mine, the targeted 144 blocks. And as a result, our annualized issuance rate also gets, chopped in half. So now we have an annualized issuance rate all the way down to 12.5%. So, within the course of 4 short years, we've gone from, Bitcoin having an issuance rate in the thousands, then in the hundreds, then slowly but surely kind of going down to 50 and then 25. And then in one single block, right, in the course of 10 minutes, it drops from 25% down to 12.5%. Okay. Um, Now, when this happened, there was no immediate effect, right? Like, it's not like Bitcoin's price jumped on that particular day in any meaningful way, or anything really happened notably other than the halving itself. And people didn't really know if there was going to be any notable effect afterwards, right? I think Jameson Lopp famously tweets, like on that day, that the halving was successful, and now we get to see this this new money play out and see if it actually works. um, and so, what does happen shortly after, within a month or two, is we have this crazy bull run. And that's not shown in this animation because there's no price data shown here. Um, but, what we see in terms of the issuance rate is we stay slightly above the targeted issuance rate. And as we kind of chug through this epoch, right, block by block, um, again, we're adding, every block we mine, we're adding more to the total mine supply. And so the daily issuance relative to that total mine supply is getting smaller and smaller and smaller, meaning, the annualized issuance rate is also trending down. So we started this epoch with a target of 12.5%, and now we're trending down over time for a target, as well as the actual issuance rate is kind of, pretty tightly following that target now. Okay. And we're trending down and getting tighter. And so, it's really at this point, right? 2016, and we have another halving now where we chopped it in half, just above 8% down to just above 4. Okay. It's at this point in 2016 where people are pretty confident that, Bitcoin's a big deal, right? Especially as it goes in terms, like, in terms of the narrative of it being sound money. I think it's really starting to hit home for a lot of people that, this is um, a fixed supply, kind of self-correcting sound money that has a very predictable issuance rate, that has a very predictable, um, you know, uh, uh, place of where it's going in terms of its fixed supply, right? It's not only is it predictable, but it's something that, people can start to have a bit of trust in, meaning, they trust that the supply won't be uncapped. They trust that it will stay at 21 million. And they're seeing this play out epoch over epoch as the issuance rate gets tighter and tighter around its target. And as we get more and more halvings, leading to a smaller and smaller issuance rate. So now here we are in Epoch 4. It's 2021. I think, the idea of Bitcoin being digital gold, that narrative really takes off in this epoch. Okay, and this was the epoch where everyone thought, institutional adoption would really take off, and we got MicroStrategy and maybe a couple other institutions interested. Um, but because of, various reasons, it didn't really kick off to the extent that we expected it to. But what did, I think, um, remain was this narrative of Bitcoin being digital gold. And I think that the reason why that narrative emerged so strongly in this epoch is because this was the epoch where, the issuance rate became very close to that of gold's, right? So I think gold's issuance rate, the the projected issuance rate of gold is anywhere. I've seen, estimates as low as 1%, all the way up to estimates as high as 3%. And the reason why we don't know it perfectly is because we never know exactly how much gold is being mined, right, day to day or even year to year. And we don't know exactly what the current stockpile of gold is. Like we don't have, a count of how many gold bars there are all around the world. There might be stores of gold that are unaccounted for, and there might be, you know, uh, there might be vaults that claim to have a lot of gold that are actually completely empty. So we don't really know what the stock to flow of gold is, but it's estimated, that the inflation rate is between 1% and 3% by most, reports that you might read online. So, anyways, with that estimate, we're finally looking at Bitcoin getting into that range. Okay, we're solidly kind of bouncing around this 1.5% issuance rate. Sometimes we're dipping, a little bit below that. Sometimes we're dipping a little bit above that. Oh, and then one other thing I forgot to mention is we had this stress test, which I think was also a pivotal moment for Bitcoin. So you might remember summer of 2021, something happened that was very important, and that was the China mining ban. So this was a moment in Bitcoin's history where almost half the miners dropped offline, right? Stopped mining blocks, and you saw that in the daily issuance, right? This was kind of the low point of that period of time. On June 27th, 2021, we only mined enough blocks to get this much issuance, which I think if you did the math, this is in the maybe the 70s, the low 70s of blocks. So half the amount of blocks that we should have been mining were mined on this day. And the reason why is because half the miners dropped off the network, right? But what happened? Well, the difficulty kicked in, right? A few days later, and there we go, right back on track. So even with half the miners shut down globally, right? And we're talking about like a pretty expansive mining network at this point in 2021. There's already tens, if not hundreds, of exahash that are pointing towards Bitcoin. Even with half of those miners shut off, which is just an extreme amount of machines that are being shut off, by the way, even with that happening, Bitcoin still works completely autonomously, without any central coordinator. Its difficulty adjustment kicks in exactly as it's designed to, and we get right back on track in terms of the issuance rate. Okay, so as far as sound money goes, I mean this is like as sound as it gets, right? You have an agreed upon and known target of Bitcoin that should be mined, um, you know, every day, and obviously there's some random variance on a day-to-day basis, but overall you're hitting that mark like pretty damn close, right? And if you average it out, I mean, it's even closer. If you kind of average it out over a couple week period or a couple month period, it's pretty much spot on. So we are sound money at this point. Like it undoubtedly, Bitcoin has become sound money, and not only that, but now we're kind of emerging as this gold, like digital gold type of money, right? Again, in part because we're hitting those issuance rates that are within that range that gold is known to be. Okay, that 1% to 3% range. Now here we are. Okay, Epoch 5, and this is where we're at now, September 16th, 2024. We got another halving um, on April 20th. So that was nearly 5 months ago. And this having brought our issuance rate, the targeted issuance rate, to well below 1%. So now we're targeting, a little bit over 0.8%. And as expected, we're, just bouncing right around that target uh, with a little variance day to day. But on average, we're pretty much hitting that target. The daily issuance is 450 Bitcoin per day now. Okay. So again, it gets cut in half every halving, and now we're down to 450 a day. And we've mined, the vast majority of the Bitcoin at this point. So of all the 21 million Bitcoin that will ever be, we've mined, 19.75 million, which is over 94%. There's a little bit less than 6% of the Bitcoin left to be mined. Okay. And, like at this point, the digital gold narrative is kind of funny because it's like now we're well below even the lowest estimates of gold's issuance rate, right? So even if we take the lowest estimate of 1% at face value, we're lower than that now, right? And um, not only are we lower than that, we've proved that this is a sound, reliable issuance rate that won't be changed on a whim. Okay. Even if you shut off half our miners, you're going to get right back on track within, a week or two. Um, and you can expect that it's going to stay this way for the rest of this epoch. And then by the end of the epoch, at the fifth halving, it's going to get cut in half again. Right. So I think the world's kind of waking up to this new paradigm that we're living in, one that has Bitcoin as a digital sound money, one that is comparable to what you might think of as digital gold, but honestly is already proving itself to be much more reliable, much more predictable, and as a result, well, much more sound. Some might argue. Okay, so I think Bitcoin is the embodiment of perfect sound money. So that's what I wanted to talk about. Hope you enjoyed that animation with a little commentary over it. If you agree that Bitcoin is perfect sound money, let me know. If you think there's better sound money, let me know. But honestly, I don't think there is. There's no other money that is as predictable and as reliable as Bitcoin. So until that ever happens, and I don't think it ever will, Bitcoin's the best money there is.